Hey guys, how are you? Vladimir here. Welcome to our weekly Forex forecast. In today's video, the euro dollar, the pound dollar, dollar yen, and of course, the gold. But before that, big thanks to 8K Broker for supporting our community to continue and enjoy all the amazing offers we have with 8K Broker, including the access to Home Trader Club up to 1 full year, all the trading strategies, all the trading systems, including the semi-automated systems, private mentoring session, and more. Please refer to the link below this video in the description. Euro dollar would be our first pair for this week. Important to start with, we don't know how the week will open after the expected bloody weekend in the Middle East. 1 or 2 days ago, the both attacks from Israel to Iran, from Iran to Israel started, and that could affect the market. It affected already, shake the indices, made oil fly high, made the gold rally as well due to the instability in the area, and that could bring not so technical moves. So keep that in mind, guys. It's important to remember that sometimes the market is simply not perfectly technical. So the euro dollar, as I said, would be the first one on our list. Last week we were talking about one of the scenarios that after this pullback we will see the euro dollar making the final rally, and that actually takes place. We also had the chance to enjoy the euro dollar in Home Trader Club this week when it delivered the first beautiful rally. But what is next to the euro dollar? So the way I see that, the euro is about to form its peak on the coming weeks. Very hard in the moment to say when, but the way it behaves, it should complete the second wave somewhere around, very likely, somewhere around this zone. And this zone is the area where the sellers were in control, here, and of course around this area. Now, I believe the euro should, on the coming weeks, maybe a bit down, maybe a bit up again, should be forming its peak. So the bullish momentum from my point of view is not yet over. I believe the euro is still there. However, we need to pay attention to how this bearish divergence develops. It's a question of time when it will peak and start the strong retrace to the downside. There are a couple of classical scenarios the way I see that for the euro dollar. In that case, the ideal one would be rallies to complete a bearish divergence here, some false breakout on the peak, and from there we can expect the euro to drop from somewhere in between 117 to 119, and from there to start its drop to below 115 again, very likely towards the 113 area. So this is scenario number one. Scenario number two, once it peaks, we start to see waves down, making lower lows on the chart, making some corrective retracement, and from there to look for these breaks and bearish continuation. These are the two technical setups I would be looking for, and again, it's important to remind, in such conditions not always the market is super technical. In terms of the numbers, you can see the months and the 7 days are very bullish, last 24 hours are bearish, which means we are in bullish momentum with some pullbacks, which could lead to further rally, as we just explained, until this will peak and the reversal will take place. Next one is the pound dollar. And following our last week analysis and discussion, one of the scenarios we were talking about is a final rally before the sales take place. So here is the great thing about the pound dollar. As the euro dollar, this one also is flirting with some key area here. And I refer to this spikes and peaks we have here. Lots of sellers around this zone. Oops, sorry. Lots of sellers around this zone, lots of sellers around this area, and of course we cannot forget that we higher we have the 1.4 round number. So similar to the euro dollar, I believe the pound would be busy on the coming weeks, setting up a peak before the reversals take place. Keep in mind also in terms of Bollinger Band, if we plot the Bollinger Band, then we have from this candle which made the breakout, didn't close but made a breakout, we have it's close to 140 as well, which is a significant zone. But with this idea in mind, we already have the daily chart forming a divergence here, which means the buyer's lifespan in that case is limited. There are two scenarios the pound could actually make, and in that case, technically speaking, one of the scenarios is we first of all get the correction and then we get the final rally. Very reasonable scenario. Scenario number two, we continue to climb slowly, making another fake high, maybe even retesting this trend line, connecting the recent peaks anywhere in between the 136 to 140. It's a bit wide range, but we are talking about a daily chart, of course, therefore the numbers. And from there, as we get to this zone and the divergence completes, look for the retraces again to 135 down to 132. On the lower time frame, the 4-hour chart, two scenarios. Ideal, like with the euro dollar, we get a peak, we get some divergence, false breakout, then we break the recent trend line, we start to go below the recent low, and we can talk about the sells. Okay, that's pretty much how I see the pound dollar. And in terms of the numbers, so this is, by the way, the market trend snapshot, one of the features we have in Home Trader Club. So similar to the euro dollar, we have 2% almost change on the monthly time frame during the last months, of course, not monthly time frame. It's confusing. 0.4% almost on the 7 days, negative on the last 24 hours, which means pullbacks before the momentum continues, and the momentum starts to slow down on the 7 days, which means the peak is not too far for the pound dollar. Dollar yen is our next setup, follow up on the previous week discussion. One of the scenarios we were talking about was this pair to create a triangle where from we should expect further breakdown. So my view did not change here as the pair was moving inside the triangle. I believe dollar yen should make its continued Asian to the downside until it completes A, B, C, D correction on the weekly chart, somewhere below 140 down to 135. On a daily chart or the 4-hour chart, doesn't matter, we can see this triangle building up. So all we need here is a good legit breakout, and that's how I see that. If we manage to see the price going below the triangle and it holds, as long as it holds, of course, then any retraces should give the green light for the sell. Keep in mind, in rare cases, and what happens around the world right now could be rare cases, the triangle goes for final rally here, something like with a daily triangle. And in that case, if that happens, pay attention to these two waves. If they manage to form its divergence, something like that, while the daily peak holds, then this zone, I would say between 145 to 147, could be a good zone for further sell again. In terms of the numbers, let's go back to Home Trader Club members area, and we have the dollar yen. Is it only me? Oh, here we go. Again, last month's very negative 7-day and 24 hours are in a corrective numbers, which means correction before very likely further bearish continuation. Look to sell the rallies. Final one is gold. One of the scenarios we were talking about last week is if gold managed to hold the bottom and starts the final rally until it will finalize its peak, and from there prepare the ground for a major sell. So as long as this sensitive situation around the Middle East will continue, lots of questions about how far this war will go and will escalate, the gold bullish pressure is on, the momentum is bullish. However, we should remember the very strong, I would say even somehow historical overbought conditions we have on gold, both the monthly chart and the weekly chart here. And right now we are overriding the upper Bollinger Band, which means once this peak forms, the situation around the Middle East will start to stabilize. Gold could start its major drop to the downside. On the lower time frame, I would expect to see something like that for a setup. Something like that. Meanwhile, on a short term, of course, rallies could continue, similar to what we saw, by the way, on the euro and the pound. We start to see some false breakouts, fake highs, right? Lazy highs or false attempts to make the high with bearish divergence, and from there I would be looking again to sell. Meanwhile, the momentum is bullish, and as long as the sensitivity continues, the gold could push further to the upside. That's it for this video. I hope you find value in watching that and the trading opportunities shared with you for this week. If you did, please don't forget to hit the like button. If you're new to our channel, please consider to subscribe with the subscribe button below this video. I also want to invite you to our trading family, the Home Trader Club. Get your access to our full, comprehensive courses, real-time trading opportunities, and mainly real-time trading education and our mentoring. Join our family with the link below this video in the description. Meanwhile, best to you and yours. Good trading. I'll see you soon with more. Bye for now.